Well, right now, folks, the drumbeats of war drowning out the drumbeat of a market that had really been putting in this perfect cadence, one of the best rallies in decades, in fact. But since the invasion of Ukraine, we have been warned of the impact, the geopolitical impact of these events that keep becoming more and more dire, and the negative trends that eventually do come and hurt our markets and our economy. Although it hasn't happened nearly to the degree that we've always braced for. I want to bring in Belpointe, their chief strategist, David Nelson. David, you know, the invasion of Ukraine was supposed to send oil to $100 a barrel. We never came close, I don't think. And since then, you know, we've had these things, October 7th, one of the worst days in the history of humanity. Still, though, nothing has materialized to the degree that we braced for initially. On one hand, I know we should be thankful for that, but these issues don't go away.
They don't go away, and the noise of war is deafening on a lot of fronts here. And I look around the world, and you know, probably since the Cuban Missile Crisis, the threat of nuclear escalation has probably never been this high. You know, a lot of these players out there have what they call tactical nukes, sub-1 kiloton weapons that are like large bunker busters, but you use that and you open up Pandora's box, and who knows where that leads.
Yeah, I'm really worried, you know, depending how successful Ukraine is in this latest effort to go inside Russia, what we allow them to use, how Russia responds to that with a tactical nuke or something. It's something that you may have thought was never
the tails are very, very fat for,
right.
for an Armageddon scenario.
Let me ask you about your cover of yesterday's letter. The global war for capital. Is China ready to challenge the USA? Of course, China took a page out of our book, I think.
More than a page.
More than a page. They took the book out of our book, huh? Because, I mean, now they're at least, I don't know, $600 billion in stimulus. Who knows? The number will keep going up, stoking their stock market. Before, it was just a kind of save the housing market. Now, it feels like they're going to spend money to try and get people to spend all of those savings.
What was extraordinary, you saw the Hang Seng actually go from one of the worst performing markets, and in just 6 trading days, it went to one of the best performing markets this year.
And by the way, a lot of that money was U.S. funds, right? I mean, these are American funds, American funds hedge
are over
funds.
There. I think, you know, investing is often a zero-sum game. You know, so if capital is going to go to one area of the world, it's going to come from another. And with our multiple as high as it is right now, we've stretched that valuation rubber band pretty far. Now, for good reason, we have the technology, we have the rule of law here, but when you have events like this, and this is their Mario Draghi moment, this is whatever it takes, and President Xi knows they're being left behind, in the long run, we win because we have all those things. We have that dominance in technology. But in the meantime, they can flood the system with so much capital. You're going to see capital go over there. I think this plays out not in weeks. This is going to be months, perhaps even a year.
So then it's worth investing in.
It is worth investing in. I am there. Yes.
All right. So emerging markets have trailed our markets for the most part for over a decade. Do you buy the EM, or do you buy something more specifically tailored to China?
I think in EM, what you're going to see shift. A lot of investors have gone to EM ex-China. Right. I think they're going to go back to the traditional EM and go back to a market weight. I'm not buying individual stocks out there, so I'm going to have to do it in the form of indices and ETFs.
I got to get your thoughts on the port strike. It began today. You know, we started the show with the manufacturing data. Inventories plunged. This is already coming into a strike. How many days in your mind does it have to last before it really starts to take a bite out of our economy?
I haven't actually done the numbers, but I would think that if we even go a week, then pretty soon the analysts are going to have to start cutting fourth quarter numbers, not third quarter, but fourth quarter numbers for dozens of industries and hundreds of stocks. By definition, just look at who this serves here. Right. It's certainly got to impact us all. It's
really a despicable strike. I mean, listen, I want the longshoremen to get paid, but I just think the timing of it is awful. I can't let you go without getting a couple stock ideas. Yeah. Are you buying these defense names? You've owned some of them in the past.
I'm not buying anything because I own them. Right. So I don't need more. And you can't buy them, obviously, on days like this. But they're insurance companies, Lockheed Martin, any of these names out there. They're insurance companies because just look around the world. Right. You know, every corner of the planet is a geopolitical hotspot. On a 9/11-like event, these are the stocks, they'll be up 20, 30, 40% in a single session.
Well, let's hope we don't get one of those anytime soon.